Hello everybody. So today I want to provide an update on two small caps that I've covered in depth on the channel about 5 to 6 months ago. These were more of my early days videos. But anyways, these are very tiny positions for me, and really it's under 1% because I consider these two stocks to be risky. They are the riskiest, some of the riskiest stocks in my coverage universe. And the reason why they're risky is because when you really start thinking about it, they both have very much major competitors, and they both kind of live in the shadow of Tesla, right? INDI provides original equipment, electronics equipment, to a legacy automakers that compete against Tesla, right? And STEM is an installer of battery packs for large projects, large industrial projects, and it installs Chinese battery packs as well as mega packs from Tesla, but it tries to attach to these Chinese packs its own software, the Athena software, which competes directly against Tesla. So these two stocks have kind of a shadow of Tesla, and if you add to that they are small cap stocks, that makes them even riskier in my view. So this is the reason why they are small positions for me. They are very small positions, but hey, if a position is say a 0.2 or 0.3% and it 10x's, then it becomes a decent position at a 3 or 4% or 2%. So that's kind of a reason why I like these stocks. But no, let's be honest, I like these stocks because of this. And let me get started with INDI. It's the growth. The growth is absolutely insane. The revenue growth for both of them is circa 100%. So we're looking at doubling the revenue. And of course, in my spreadsheet, whenever you're about to double revenue, you are heavily advantaged in the spreadsheet, which is why they are dirt cheap. And INDI is not only doubling revenue, but it's doubling revenue with really good gross margins at 44%. These are pretty close to your typical semiconductor industry margins, which is, makes for a stunning combination of revenue growth and decent margins. And what do they do, right? What does INDI Semiconductors do? Well, they do a lot of driver assist systems. They do a lot of in-cabin user interface. For example, another thing that they have is a system, for example, to open your car with your iPhone or your phone. You can, like a smart key, like you can have a key and open the car. They do with that, but they do user interface, connection with Apple CarPlay, all of that sort of stuff. They're not the only ones doing that, by the way. And then electrification itself is their third business, and they do a lot of systems on a chip to enhance charging and battery management systems, etc. So this is a very specific industry, and of course, not only is it specific to the semis, which I have a little less knowledge about semis, as evidenced by my selling of Nvidia 6 months ago. I'm gonna get over this at one point, but I shouldn't have sold Nvidia. So of course this is semis, but this is semis related to the auto sector. So we get into a level of granularity that I think a lot of investors lack. But I do understand numbers, and when I look at numbers, I like the numbers that I see. Interestingly, this is a company that has been growing what I like to call Broadcom style. Like they've been successful with acquisitions. They've been successfully growing with acquisitions. Of course, they do way less acquisitions right now because of the market. Right, the market is not open for acquisitions anymore. Their capital is not cheap anymore. So now, hopefully, and we know that from the shareholder letter, they're focusing on exploiting the current companies that they've acquired, and they also develop in-house now. And you can see organic development still happens, but they did a lot of acquisitions. So anyways, the point is the growth continues for a company like INDI, and it continues unabated as legacy auto literally tries to catch up with Tesla and pours billions into their equipment manufacturers to try to just catch up to Tesla, or at least on the surface offer the product that looks kind of like what Tesla has. And so that's the reason why this company's growth is accelerating. And if you look at the August 10 report for Q2 2023, which they reported on August 10, I mean, I love growth, and 102% year-over growth is nothing to sneeze at. But if I look at quarter over quarter, I'm seeing a clear acceleration. 29% sequentially from Q1 2023 to Q2 2023. This is stunning to me. This is pretty much stunning to me. And sure, they have a little bit of a loss at a $16 million operating loss, and this is probably why the stock is not doing too well with short-term oriented Wall Street. But much of that loss is actually due to R&D, so that doesn't bother me at all, and that doesn't bother me at all for two reasons. The guidance, first of all, we know in Q4 is probably when the cash bleed stops. In Q4, they will have positive operating income, and this is clearly understandable, as the stock is literally left for dead right now. But even if they didn't, that wouldn't bother me too much, because they have $181 million of cash that they can take on the balance sheet. And so, yeah, you lose 16 million a quarter, so you have 181 million of cash. That gives you more than a 2-year runway before you run out of cash. And of course, I don't think they will, because they're gonna go positive, cash flow positive sooner than later, especially with that level of growth, right? The revenue growth here is growing much faster than the R&D expenses. So bankruptcy risk to me is limited. Teeny tiny position, risky company, but the growth is stunning, and the gross margin is also excellent for the semi space for a company that's small. Moving on to STEM. So STEM is another company that's predicted to grow at more than 100%, or just about 100% over the next 12 months. Their gross margin is pretty bad though, but it is gonna get better as we go through the years, because they will be transitioning from a hardware system to a software system. And the reason for that is because it has to do with the business model. So what is the business model of STEM? Well, STEM is an installer of battery packs. That's what they do. They install Chinese battery packs and Tesla battery packs, Tesla mega packs, as they call them, right? And once they install those systems, they attach, typically a 20-year contract, they attach software. They attached a 20-year software, and that creates recurring revenue. And so when I look at the Q2 2023 for STEM, when I look at the highlights of that shareholder letter, what do I see? I see a bunch of stuff that I like. First of all, the contracted backlog is going up and up and again up, and this is really good at 88% year-over-year contracted backlog. But keep in mind, this is a company that signs contracts for future revenue growth, but then it has to turn that revenue growth into revenue. It has to turn that backlog actually into revenue, and you're operating in a world of bricks and mortar, if that makes any sense. So it takes a while for you to turn your contracted backlog actually in revenue. And don't forget also, just because backlog is contracted doesn't mean a utility, a grid, an installer gets upset with the wait and then they cancel the order. But this is nonetheless a company who has a funnel which starts with backlog and then goes through booking and then goes through revenue. And so the revenue will keep growing at this level, in my view. This is really good, and I'll show you the guidance. The guidance is stunning. They're on track to achieve positive EBITDA, positive adjusted EBITDA, which is a proxy for free cash flow, in Q4 of 2023. So again, I don't think this is a company that is headed for bankruptcy, to the best of my ability. If they do, not a problem. Teeny tiny portion of a portfolio. This is important for me in these stocks. I can't emphasize that enough, that these are tiny positions. But when you look at the guidance, this is where it gets stunning. Like if you look at this is their full year guidance, which they gave us in February of 2023. So they are guiding for this stunning revenue number, let's call it 600 million. But look at on the back end how much they're expecting. Stunning growth, right? Between 165 and 195 million. Then almost could be as much as 300 million in Q4 of 2023 is their estimates, and they reaffirmed it again. So which means that but they probably don't see a drop coming. Otherwise, they would have updated that for us. And this is what I'll conclude on, which is their strategy to me is working, because their recurring revenue between 80 and 90 million by year end of 2023. Keep in mind, this is a company that's trading a little north of $1 billion in enterprise value, and you are nearing $100 million in recurring revenue, again with 20-year contracts. And that recurring revenue right there is where 80% margins exist. So they essentially don't make much money on the installs. They're an engineering firm, and they design those installs, but they make very little money on these installs. The gross margin on these installs is like 10%. Really, really bad. But then, once the product is installed, they sign a contract which turns into recurring revenue for 20, 25 years, and hopefully in 20 or 25 years it will be renewed again. And so this creates a very interesting company, which starts out as a hardware company and thus is very unattractive when you look at those gross margins, and then over time may turn as a software company. And don't forget that Elon Musk, when Elon Musk talks about storage and energy storage divisions, he's actually said that electric cars might be a rounding error compared to the size of the electric energy market. It might be a rounding error is actually what he said. So if energy could be bigger than, say, the automotive sector, I mean, if this is, when we start thinking big, if this is what's going to underlie our grid, our electric grid, which is going to need all of these updates, all of these batteries, right? You can't have an electric semi-truck without battery packs. It's not possible, because otherwise it would take, 20 hours to charge an electric semi. So you need a battery pack for that. You can't have a large-scale industrial building without a battery pack if you have solar. If you have solar, you need a battery pack to store that solar for the night. So that market could be absolutely tremendous. Energy underlies everything we do in an economy, and the demand for energy is only going to grow. So again, I'm very comfortable with the mega trend that STEM is in, and happy to own just a little bit of STEM. So, in conclusion, this was not investment advice. This was just entertainment. Hope you were entertained. Appreciate your likes. Appreciate your subscribes. Have a wonderful, wonderful day.